Welcome back. On Thursday, Broad Street was the venue of a one-day Bloomberg NSE Interactive Forum with bank CEOs, oil executives, energy analysts and capital market operators on a number of issues, including the Nigerian banking environment in a low oil price world. Of course, we know that oil prices have been falling since it's been a year now, since June last year, where we saw oil prices crash from as high as $115 per barrel to where we're at now at roughly between $60 and $65 a barrel every day. Now, this has generated a lot of concerns among individuals, especially for most countries, including Nigeria, that depend on oil for revenue. Now, we've seen that, of course, there's also been a drop in allocations to the government, a drop in reserves, and pressure, of course, on the Naira. Now, a lot of people are asking that now that we have the energy boom at a low, how difficult is it for banks to cope, especially those ones who have constantly given out loans or raised some form of bonds or underwriting bonds for these oil companies? How have they coped? Well, we're hoping to speak to Paul Wallace, who's the Bloomberg Africa reporter. He's expected to join me to talk about this from a business journalist point of view. But still, taking a look at the issues, another thing that was raised at that meeting was the possibility of having the markets begin to determine how Forex should be sold. Whichever way it is, we know that the Central Bank of Nigeria has tried very hard to continue to ease pressure on the Naira, which has been on in the last couple of months since oil prices began to drop. And now we know that Nigeria's external reserves as of June 25th stood at roughly about $29 billion. Now, how much of this is going to, see more pressure happening? Remember that the former central bank governor actually talked about the fact that when reserves drop below $30 billion, then there should begin to be cause for concern. But we're hoping that somehow or the other, the Central Bank of Nigeria will come up with monetary policies that will protect the Naira. In a couple of days, the Monetary Policy Committee of the Central Bank of Nigeria will be meeting, and this meeting is coming at a time when strong economic headwinds continue to buffet Nigeria's economy. Don't forget as well, we have the issue of salaries being owed by some state governors across Nigeria, and then the president has had to wade in. And a lot of questions has been on about if we continue to draw down on excess crude account, it's going to be putting pressure on the foreign reserves, because from some reports, actually, it seems that there isn't really so much in the excess crude account, and so there may be pressure on the foreign reserves, which might be used to offset some of this debts. But let's talk to Paul Wallace now and get his thoughts on all of these matters that have come up. Paul Wallace is a reporter with Bloomberg Africa. He also moderated one of the sessions at yesterday's interactive forum with bank CEOs held by Bloomberg and the NSE. Hello, Paul. Thank you so much for coming through.
Hi.
Now, banks have been lending to companies in the oil and gas industry and underwriting bonds, and we know that this has kind of reduced in the last couple of months, especially since oil prices started falling. Do you think the energy banking boom is over?
Banking to the energy sector makes up quite a proportion of lenders' loan books. It sort of towards the end of last year, it made up about 25% of loan books. We don't know how that's changed since since oil prices started coming down, and I don't think we're going to find out for a while yet. We'll get some idea from banks' half-year results. Yeah. But I don't think that banks can fully stop lending to the sector, given how important it is in terms of the Nigerian economy. And when we've spoken to bankers, including on the topic that you mentioned yesterday, they say that rather than stopping lending to the sector, they're looking at the loans that they already have in place and trying to doing stress tests and various things to try and find where the fault lines are, and where they are, trying to restructure those or perhaps extend the tenor and things. But on the whole, banking ICOs they say they're fairly comfortable with their exposure to the oil sector. They claim that Nigerian oil producers have low production costs by global standards, and they don't expect to see a big rise in NPLs because of the crash in oil prices.
So, talking about that session you moderated that focused on Nigerian banking environment in a low oil price world, what actually stood out for you, from that conversation with the panelists?
Well, I asked them about low oil prices and how that was affecting their operations, and they were fairly bleak. We had Bisi Olasanya, the head of First Bank, the country's biggest lender by assets. We had Peter Mambo, the head of Zenith Bank, and Femi Olaloku, who's a senior executive at UBA. And whilst they said that the fall in oil prices was having a big impact on the economy, they were particularly concerned about government finances, and they said that oil makes up about 2/3 of government revenue, and Bisi Olasanya said that about half of Nigeria's students are behind on salary payments, and that's a big problem for banks, because a lot of their consumer lending is targeted at people who work in the civil service.
So what form of solutions do the bank chiefs prefer as the economy is trying to find its way out of these issues?
So what did you say? What solutions did they offer?
Yes, what kind of solutions do they offer? Because as much as they highlighted the issues, they might have also spoken about what kind of solutions can be used at this time where it seems as if it's such a tight squeeze for the country.
Well, they didn't imply that there were many solutions that the banking sector itself could come up with, but they called on the new government to sort of come out with economic policy statements and to make appointments with regards to the economy. So I think what they're looking for is to get a better idea of the sort of economic direction of the Buhari administration. They implied that they would like a cabinet in place fairly soon. Positions such as the finance minister and the oil minister, those are things they're going to be looking at very closely to get a sense of the government's economic policies. And the other thing they mentioned again and again was the FX regime in place at the moment, and they're worried about the naira and the restrictions in place on trading the currency. And they said that their customers are struggling to get access to the dollars that they need to run their businesses, and that was probably the biggest single worry they had.
Well, we'll get to that in a bit, Paul, but you asked the chief executive questions on, consumer lending. That's the bank chief executives on consumer lending. What was the stance on this? I know you already mentioned it as well, but could you just flesh it up a little?
Sure, that was pretty interesting. I asked Bisi Olasanya that because it was in response to Femi Olaloku from UBA saying that consumer lending was perhaps an exciting area for Nigerian banks in the next few years. And Bisi Olasanya of First Bank, he said that whilst maybe a few months ago he would have said the same thing and would have said that this is an area that Nigerian banks should tap into and look to as a source for future growth in profits and earnings and things. He said that he was a lot more bearish about it now because of the fact that the government's finances are under such strain. And he said that if you're going to do car loans or you're going to do mortgages, a lot of those are going to go to workers in the public sector. And he says that with the problems at state level and even the federal level, that type of lending is going to become much more risky. So he implied that actually the consumer lending and other types of consumer banking is something that lenders in the country are going to be very cautious about, at least over the sort of near to medium term.
Well, Paul, you're a business journalist and you've covered the Nigerian economy for quite some time now. Judging by the conversations and what's actually happening, Are you worried that things might be getting a little out of hand? And do you think that the monetary and the fiscal authorities have things in check?
Sorry, I missed the first part of that question.
You're a business journalist and you've covered the Nigerian economy for quite some time, for quite some months now. Looking at the responses and the conversations you had, and with regards where Nigeria is at the moment, are you concerned that or worried that maybe the fiscal and the monetary authorities are not doing enough, or more can be done?
Well, I think that's, in terms of monetary policies, I think that's probably the view of most bankers in this country. They seem very, most of the ones we speak to seem concerned about the central bank's policies when it comes to the Naira, and that's something they highlight. DC Onasanya yesterday also told us that he was worried about the stringent banking regulations, and in particular the 31% cash reserve requirement, which means banks like his have to park a lot of money with the central bank at 0% interest, and that's something that he thinks needs to be changed. When it comes to the fiscal policies, I think people are, I think they're giving the government time. I don't think, in the financial sector at least, they're being too critical about the new government yet. But they would certainly like to see movement on the economic policy front quite soon, and that means things like a cabinet being put in place. That means things like the Buhari administration stating what it will do with fuel subsidies. That's a big issue. I think people want to know whether the government will scrap them or whether it intends to keep them or whether it will do something else. And also they want, I think they want to know more about what the government intends to do with the oil sector, because that's sort of a big issue, and a lot of foreign investors say that needs to be cleaned up, and they need to take measures to ensure that Nigeria's oil production is boosted. So those are the kind of things they would like to see.
Well, another thing I know a lot of international investors would like to see is the CBN stance on the Naira. You talked about it a little bit, but also we've noticed that there's some companies that have stayed away from the Nigerian market because they're thinking or they're watching the handwriting on the wall, and it seems as if there might be a devaluation. Now, some experts are actually calling for the markets to begin to determine how much the Naira is sold for, some of the basket of currencies that we have here in Nigeria. Did you get the same feeling too?
Yes, for a long time, foreign investors have been telling us that they think the Naira is overvalued and needs to weaken, and they're not buying Nigerian bonds and assets at the moment because of that. They say it makes little sense for them to come into the Nigerian Stock Exchange, for example, if they think that there's going to be a devaluation a few months down the line, because that would hurt their returns in dollar terms. So they're waiting for devaluation to happen, and then they might come in. On the whole, they're pretty positive about the Nigeria story. They believe that it's a country with great long-term economic potential. But their immediate concern is the Naira, for sure.
Well, Paul, let's take a quick break. We'll come back and continue this conversation. Well, the conversation with Paul continues after this break. Please stay with us.